Time now for Options Corner. Joining us to take a deeper look at this chart, it's Rick Ducat, lead market technician here on Schwab Network. All right, Rick, take us through the trends you notice in this chart.
Yes, good morning. And when we look at GE, it's split into three companies: GE, the aerospace and defense company; GE Vernova, the energy company; and GE Healthcare here. And it's kind of an interesting microcosm of how the market has gone here. Energy very strong, and GE itself doing quite well, doubling since the day of March 28th, 2024, which was when it started. GEV started trading here. Healthcare not doing so well. A lot of government and legislative changes to this area here. If we were to look at that aerospace and defense sector, though, we can see that GE, once again, at the top of the pack here on the yearly chart here, the past trading year. Boeing, Raytheon, Northrop Grumman, General Dynamics, and then Lockheed Martin, all faring, kind of at different levels here, but Lockheed really is the weak one here. So if we were to look at our candle chart here, we can see prices trending upward in a channel type shape here, but more recently we've hit a bit of a range. This area right here, we've seen range bound trading for a while here between 305 and 290 here. So this is the short term boundaries to keep an eye on. We did hit intraday highs of 307.25 here. So if we were to look at our other studies here that we focus on, our volume profile study shows nodes in this area and this area here near about 270 and 300. So those could be some more congestion areas to be on the lookout for. If you notice as well here, our trend line lines up fairly closely with our blue linear regression line, as well as the lower edge of our trading range. So that 290 level, 290 to 296 or so, that really stands out as a downside point to watch. Just a bit below that, we have our orange line, our 63-day EMA coming in near 282, and then our other volume node near 207 is where things start to thin out until we get all the way down here near 250. Momentum trending downward here. RSI, however, on the verge of breaking out above its trend line here after holding on near that 50 midline here. So look for further bullishness if we do start to move upward. Expected move here, 29.20 in either direction, about 9.6% plus or minus here. The lower end near 274 is where we start to line up with our volume node here. So that's a supportive area. To the upside, we're pretty close to our +1 standard deviation channel near about 332.
All right, thank you, Rick. That is Rick Ducat, the Duke of Data himself. Now take us through an example trade. I want to bring in Tom White, a senior options contributor and co-host of Fast Market. All right, Tom, big day for GE Aerospace tomorrow. A lot of the defense sector actually, or defense really in focus tomorrow. GE Aerospace has been a huge outperformer so far this year. What's your approach for an example trade?
Yeah, Rick mentioned that consolidation we've seen. It's still up over 80% so far this year. The option market priced in about a plus or minus 6% move in the shares either way after they report tomorrow morning. So expectations really elevated at this point, but at the same time, that consolidation's kind of stalled out the rally that we've seen. So I looked at a strategy that takes advantage of some near-term volatility and makes it neutral to slightly bullish and taking advantage of vol dispersion in this complex four-legged spread. So we're combining two strategies to create this bullish trade here. Neutral to bullish. We went out to the October 24th weekly options. Those expire this Friday, 4 days, right? We're going to sell an out-of-the-money put vertical. We're going to collect a credit on that. We're going to sell the 287.5 strike put, buy the 277.5 strike put. So a short $10 wide put vertical that collects a credit and helps pay for a 1 week wide call calendar to the upside. So we're buying the October 31st weekly options, the 315 strike call, selling that same 315 strike call in the near-term October 24th weekly options. So 1 week wide call calendar to the upside is help paid for by the short put vertical. You're going to collect roughly, if we open up here around the level of about 303, you're going to collect maybe about a 50-cent credit. So what does that mean? Well, it takes my break even on this four-legged complex trade all the way down to 287 to the downside. So that short 287.5 strike put that we're selling, you add that 50-cent credit, your break even all the way down at 287. That's nearly 5% below the current share price where the stock is going to open up. Now, where do you want the stock to go? Well, you want it to go at or near 315. That's about that one standard deviation move that the option market's pricing in. But you can see here, even if the stock continues to consolidate near this 300, 303 level, it's still going to be profitable on this trade. Anything above 287 is going to be profitable on this complex trade, and you're taking advantage of that vol dispersion I mentioned. You're buying about a 44% implied volatility on the call calendar in the October 31st weekly options, selling about a 72% implied volatility. So that vol dispersion lowers the entry point price for the call calendar, and you're financing that by selling the put vertical on this neutral to bullish trade.
Okay. All right. Thank you, Tom. That is Tom White, senior options contributor and co-host of Fast Market with Example Trade there for GE Aerospace. Those earnings due tomorrow morning.